Welcome back to another market recap analysis for Monday, October 6th, 2025. That's this little tiny little candle right here. Let's zoom in. We got another little doji candle for the day, pretty much flat. We'll look at it in more detail. Let's go to the levels and the game plan that was posted this morning. Had a number of levels on the board for this morning, including a zone between 673.73 and 674.06. But to get there, price will need to get above 671.86 and close some candles of significance above that. That was kind of the barrier, if you will. Still a tradable level. It wasn't really an access point or anything, just overhead resistance that the bulls need to get above. On the other side, we talked about the possibility of maybe some bearish behavior, some signals on the 3-hour and the 1-hour charts from Friday. Not really sure that played out. We need to see some more obvious signs and signals of bearish behavior before we can say that the market is not bullish anymore. It's still bullish, even though they were flat today. This is what the chart looked like at 8:52 a.m., almost 40 minutes or so before the opening bell. Here were the two levels that were hit and produced trades. At least one of them produced trades per the rules. So we'll zoom in here a little bit and talk about how you would have traded these levels. So we're going to give the market 15 minutes to settle in. Now you'll notice the first 15-minute candle here, 9:45, they came down within a few pennies. So we're going to adjust this level up 5 cents. So 670.04 becomes our operating level. We'll zoom in here a little bit. So they had already come down here on the 9:45 candle and got to a low of 670.06, 2 pennies away before taking off. Now, it wasn't before the 15-minute window. Technically, this level is still good and you can trade it on the long side, but they came down again well after the window was open to a low of 670.09. That's 5 cents away. Took off to where? Enough to give a base hit. We're looking for 4 points in the E-minis. That's roughly 40 cents right there. That's the trade. And just to give you an idea on the other side of what my fumble threshold looks like, down here at 40 cents below the entry level. So what we don't want to happen is price to get under this level and do a few things, but it's not uncommon for price to mess around with a level before support or resistance is established. In this case, they did, but we cannot count this because of that near miss right there. That's my point in telling you this, because if you're playing by the rules and you ignored this little action here and went long when they came down to it here a few minutes later, at 9:56 a.m., what would you have done when price fell down here? In my case, if I had bought 6 contracts, which because I've been trying to play 6 contracts on most levels, that would have represented $1,200 or more dollars, $1,300 or so out of the money down here. I don't know if they're going to go farther down to the next level. We have more support down here. Do I want to be out of the money that much? So anyway, just to avoid that, there is a rule that says if you see a near miss kind of behavior happening, then the prudent thing to do is just consider the level done. So 669.99, that was the official level. It is done for the long side. And by the way, price did not get under it long enough to trade it on the short side for a recycle trade. They just messed around with it, bounced back up. Now they're going up to 671.86. So they're coming up into this level. We're going to pull it down toward price. So 671.81. That's 5 cents toward price. Let's go ahead and reuse these. What we're looking for is a 4-point move in the E-minis, roughly 40 cents right there in the SPY. We don't want it to get out of the money, 4 points or so. In this case, the level worked as designed. You just need to give it some time. They came down a couple times, but not within 10 cents. The low here, for example, was 671.52. Went up. They went back to the entry point, your break-even point, but they came down, gave a base hit. And if we zoom back out here, just another example of how the market tends to move, or at least the SPY, tends to move in these 40-cent increments here, kind of stair steps. That's 40 cents, another 40 cents, kind of bounced around here. But once this level was traded on the short side, we're not going to trade it again on the short side. But price got above this level. What was the original level? 671.86, I believe. They get above. We're looking to see if they can do it for at least 20 minutes. It's not a magic number. It just tends to work out more often than not that if price comes down after 20 minutes, there's a better chance it could bounce at the level, therefore giving you a recycle trade on the other side. We will be trading this level on the long side. We added 5 cents to our level. It's 671.91. They really were not above it. They came down here within 20 minutes. They did it again. So overall, this is 20 minutes, and they did bounce. You can see it worked, but we cannot count this recycle trade because by the rules, you really want more time. It's just one of these processes to follow, and it works more often than not. And I'll just explain now. If price came up beyond the level, came back down pretty fast, like in this case, within, say 8, 10 minutes, 12 minutes or so, there's a better chance that that's just a spike and they're going to continue down from there. But in this case, as we can see, 671.86, the official level for the morning, was important. all day long for the rest of the day. And that basically made an open over here, a close over here, pretty flat day. Gave us a doji candle, open and close within pennies. My trades looked like this, pretty much played by the rules. So I'll let price get down here to 669 or 670.04 as adjusted. And there's the near miss. I did not trade it. So no trades got entered, and just let that thing go. When it went up to 671.81, I went short with 6 contracts because everything looked good. There we are. Plan to take 5 off at a base hit of 4 points. Now, think about if I took all 6 contracts off, that'd be $1,200. And as you'll see, that would have worked out better because there's $1,000 in a few minutes when that got satisfied. And then I'm trailing the remaining contracts down, thinking, well, there could be a chance they'll come all the way down to this other level, and I'll pull a few more points. But with my 6-point trailer, I ended up getting stopped out when it was out of the money right there. Move this back up. It went up, filled that when it was out of the money. So you end up getting a little less than $1,000, but I'm not going to complain. But it just kind of goes to show that more often than not, the following the rules tends to work out better. Here is the playing by the rules log. You can see the 4 points, the explanation of how that happened. We just saw it, but here are the notes and the levels and the trades quantified. My one trade was the equivalent of 3.208 points because it was $962.50 before commissions. Back to the daily chart. Can we make anything out of this? Well, they never got to the trend line. I guess I took it off, but I can put it back. This is the one we're talking about. I think it was this general area here. Never made it to the trend line again. We can zoom into something like an hourly chart. There probably is some other areas here I could probably identify a little bit more precisely, but looking at that overall trend line as being a target for the bulls, and they couldn't get to it. But really just for today, they're kind of going sideways. Here on the 5-minute chart, they came all the way down, bounced off the 200, moving around, got back below the 50 at the end of the day. 10-minute chart, a little better position. They're still above the 50 on the 15-minute chart. Let's just kind of move on up here in time. Nothing bearish about these charts at all. Let me zoom back out here on this 3-hour chart. So here's something just to look at. Price had been going up a certain amount of time. We had this, I wouldn't call it a classic reversal type of signal here, but price came down. They closed below this other, they're trying to shoot up to this here at this 9:30 candle, the very first 3-hour candle of the day. They were trying to shoot up, possibly to get to the trend line, and they got rejected and fell back down the last 3 hours, or the 12:30 to 3:30 p.m. candle, I guess. So that's a little bit of a bear signal, not classic, but in the pre-market, they gapped all the way up here. But they just couldn't get above the highs of this. So not much to say other than the fact that they're just moving sideways. And we'll see what tomorrow brings. I really can't give a whole lot more forecast. I should have some levels in the morning that will be refined, and we'll just wait and see. That's it for the recap for Monday, October 6th. Good way to start the week, putting a few points in the bag. I will talk to you again soon in the next recap. Have a great rest of your day.